The Indian stock market experienced a significant downturn today, mirroring a broader global trend of unease among investors. Key benchmark indices witnessed a sharp decline, with the Sensex and Nifty both closing over 2% lower. The Indian rupee also took a hit, weakening against the US dollar, adding to investor worries. Market participants are now closely watching the Reserve Bank of India's next move. Despite the overall market gloom, certain sectors and companies managed to weather the storm better than others. Reliance Industries, India's largest conglomerate, saw its share price relatively stable. This can be attributed to the company's ambitious foray into the green energy sector. The Adani Group, another major Indian conglomerate, also remained in focus. The group is reportedly in talks with international investors to secure funding for its various infrastructure projects. However, the Adani Group is also facing scrutiny from regulators over certain financial dealings. The looming threat of a global trade war is one of the primary factors weighing down investor sentiment in India and around the world. The ongoing trade dispute between the United States and China, the world's two largest economies, shows no signs of abating. This tit-for-tat tariff battle is creating uncertainty in global supply chains and disrupting trade flows. Adding to the anxiety is the increasing evidence of a slowdown in the US economy. Recent economic data from the US suggests that growth is losing momentum. The combination of rising interest rates, persistent inflation, and the ongoing trade war is taking its toll on the US economy. As a major global economic engine, any slowdown in the US has ripple effects across the world, including India. India, being a highly trade-dependent nation, is particularly vulnerable to these global headwinds. A slowdown in the US economy, coupled with the trade war uncertainties, could dampen demand for Indian exports. This would have negative implications for India's economic growth and corporate earnings. Furthermore, the weakening Indian rupee exacerbates the situation. A weaker rupee makes imports more costly, which could further fuel inflation in the Indian economy. This puts pressure on the Reserve Bank of India to raise interest rates to combat inflation, but doing so could potentially stifle economic growth. Amidst the prevailing market gloom, Reliance Industries stands out as a beacon of optimism, particularly in the renewable energy space. The conglomerate has made significant strides in its green energy endeavors, outlining ambitious plans to become a global leader in this rapidly growing sector. Reliance has allocated substantial capital to develop green energy projects across India. These projects encompass a wide range of renewable energy sources, including solar, wind, and green hydrogen. This strategic move into green energy has resonated well with investors who see it as a long-term growth driver for Reliance. By investing heavily in renewable energy, Reliance is contributing to India's energy security and reducing its dependence on fossil fuels. This will have a positive impact on India's balance of payments and create new jobs in the green energy sector. The Adani Group, another prominent Indian conglomerate, continues to make headlines, albeit for a mix of reasons. The group is actively engaging with international investors to secure funding for its ambitious infrastructure projects across sectors like ports, airports, and renewable energy. However, the group is also grappling with regulatory hurdles and scrutiny from authorities regarding certain financial dealings. This regulatory overhang has cast a shadow on the Adani Group, making some investors apprehensive. Despite these challenges, the Adani Group remains optimistic about its future prospects. The group believes that its strong track record in executing large-scale infrastructure projects, coupled with its commitment to sustainable development, will help it overcome the current headwinds.